Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. Well, Dr. Ed and I just finished our quarterly webcast for our subscribers, and we got some of the new figures coming out of the community banking industry in the first quarter of 2014. And when we look at it, what we were talking about is that this is not particularly good news. We've talked in previous quarters about net interest margin, even with where interest rates have been, as actually heading up slightly, staying the same over the last quarter, but now we're starting to see the effects of the net interest margin starting to move down. And when we look at that in terms of the mix, is the cost of funds, the orange line, continue their downward movement, but look at yield on earning assets in here, dropping at a much faster rate. We then look at other components in here in terms of what is the motivator for the strength of bank earnings, and once again, this is not good news. Once we think about 1% type ROAs, is that we look at the national benchmark, and where we hit a high of almost 0.78% back in 2013, that it's been a steady decline in terms of overall ROA, which would indicate to us an overall decline in terms of the earnings power on average across our nation. So when we think about that, is that we need to think better in here, because the point that I've made over and over again is that how long are board of directors going to be in a position to take this kind of level of earnings and then look at it from a risk perspective and a regulatory perspective? And we have to think about getting those ROAs back up into that 1% type of area. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.